This is Eric Mother with Mother.com with the weekend market analysis for the weekend of May 25th and May 26th and 27th of 2019. Take a look at markets here with about 1 minute to go. And this is end of week trading, end of Friday's trading for May 24th, 2019. Let's take a look at the closing numbers, or what are going to be the closing numbers. S&P 500 for the week, down about 1%. Let's take a look at the Dow. Let's take a look at where the Dow closed for the week, or is closing for the week. Dow down about 0.7% for the week. Let's take a look at where the Nasdaq is going to be closing for the week. And we can see that Nasdaq down about 2.3% for the week. All right, so let's begin here. But before we do, let's take a look at the closing numbers here with a couple seconds to go before the end of session. There we have the bell. So that's the bell, end of trading session. Let's go take a look at the S&P 500 weekly chart to begin with. We can see S&P 500 now closing down about 1% for the week. Now, one of the things we can see here is clearly we had already shown confirmation of a failed breakout based on the levels we were watching here. Since that failed breakout, of course, markets have been leaning lower, with the last couple of weeks being to the downside as a consequence of this failed breakout on the weekly. If you had been following my analysis, you can see that we had come back on the weekly chart to test what was the break of the highs, or off the highs of 2018. We got this break here. This turned into resistance. At the highs of 2019 so far. So the pullback over the last couple of weeks is consistent with some of the things we've been following. Now, I take a look at the S&P 500 daily, and I think there's a nice way of looking at this, and it is the fact that at about 2800, so let me just draw a line around zero zero. And what we're going to see here is, looks like the market is very aware of this level. So let me just draw the level here. Somewhere around here, we get an interesting perspective as to what the market is doing. We got support here. In fact, all right, let's do this again. You got areas of support here. We broke down below that level, turned into resistance areas, turned into a breakout level here, and then turned into support on multiple occasions. And we can see over the last 2 to 3 weeks, we've bounced on this line, including the lows for this week. So the market is very aware of this 2800 level. So until we break below that level, we can say the market is doing its best to hold and stabilize after a recent pullback. Now, keep in mind, we are also trading between an upward sloping 50-day moving average and a flat 200-day moving average. And that is just another reason why, from a technical perspective, the market seems to be pulled in either direction. We're in a no man's land, in my opinion. But I would say the key takeaway is, if we are trading above 2800, that remains constructive for the market. At some point, should we go on to break below this level, then that would be bearish. Clearly this week, at the lows of this week, and I believe last week, the market has found support around the 2800. So we can see the S&P 500 is finding support where it needs to in the short term. A break below this level would definitely be something to watch for, maybe even a reason to trigger fresh selling. So this continues to be the level to watch in the short term for guidance. That concludes the free portion of this video. The rest of the video is for paid Mother.com subscribers. Do enjoy the long holiday weekend. I'll see you in the next edition. For subscribers, let's continue on.